$40 billion coming in this month. What would you do with $40 billion?
French Riviera?
Coming right up. Good morning, my name is Barry Horvath, and this is Moving Forward TV, your local real estate and mortgage update.
And I am DeLynn Gaston. Thanks for joining us today. You know, Moving Forward TV was designed and developed, you can get there by easymortgageanswers.com, and this was designed to help realtors, title people, mortgage people, consumers, buyers, sellers, update you on what's going on in the mortgage and real estate fields. Our industries have changed so much in the last few years.
You think?
Tons. And even people who have been in the business for a long, long time have to re-educate themselves on what's going on. So that's the whole purpose of this show, just to kind of like, if you're new to us, joining us, you can subscribe over here for free. Our goal is to educate everyone out there on all of the changes so that we can all move through this economy change as quickly and easily as we can. $40 billion, that's with a B. Billion dollars. The government tells us that they are going to be pumping $40 billion into the banking system. Are you ready for this? Per month. $40 billion per month.
Oh my gosh.
What would you do with $40 million?
40 billion?
40 billion.
Not 40 million, 40 billion.
Billion.
I would hire some referees for the NFL maybe. You know, just looking at that catch on Monday night.
Of course you would.
Holy cow. Did you see that? That was clearly an interception.
You know, maybe if
Jennings
we had more cameras.
The ball. Green Bay should have won the game. I'm not biased to Green Bay. I'm happy for Seattle. They won the game.
Maybe 30 cameras all the way around so that the referees could have seen from the other angle.
$40 billion worth of cameras wouldn't have reversed that call. That was crazy.
That was ridiculous. Okay, so besides the NFL.
Okay, all right, let's talk about hockey. NHL, $40 billion. We could take that and just start the season. Maybe we're not going to have a season this year, but $40 billion this month could clearly start a hockey season. Okay. We're not even close to this negotiation right now.
All right, wait. Non-sports related.
Oh, $40 billion.
Non-sports related. What are we going to do with $40 billion?
You're talking about the mortgage-backed securities that the Fed wants to put into the economy, of course. Okay. All right, $40 billion. The Fed said this week they are pumping $40 billion this month into the mortgage system. This is called QE3.
Just because they didn't do it right in number one and number two?
Well, QE1, QE2, they're trying to measure it. Unemployment since 2008 has been at 8% or better. So the Fed feels like if we just start printing out money, $40 billion per month, that if we do this, then that will stimulate the economy.
And will it?
Well, that's
how is their theory working on?
Well, here's the theory.
Getting people working.
If we put 40 billion in this month, 40 billion next month, and this is the actual plan, they're going to keep putting 40 billion in until they think it's a good time to stop. So,
or until the printer runs out of ink.
And once the inkjet runs out of ink, then they're going to stop printing that money. So $40 billion is going to lower interest rates, and which they have come down this week.
You know, it's amazing how low they are right now.
They are low. So are they going to go lower? Possibly. But you know what? It's going to stimulate the painter working. It's going to make the carpet layer working. People are going to go to Lowe's. People are going to go to Home Depot. So the borrowers are going to benefit from this. But guess who's going to be penalized, DeLynn?
People who save.
The savers are really
our 401ks are...
Well, more so the people who are on fixed instruments.
Right.
Because when you go to a savings account right now, you're not going to get any kind of interest. So,
no. I mean, not even the Fed funds. I mean, the Fed funds rate's at 0 still. So
how do you get lower than 0?
Right.
Pretty soon they're going to pay us to borrow money. Well,
that sounds good.
That does sound good. So, with a comparison though, right now, if we keep printing this money out, this economy should stimulate. That's the big should. So
right.
This is, and it's not ironic that we're pretty close to an election right now, maybe?
I know. So the timing of this release is interesting.
It is very interesting in itself, yes, right. Because, you know, we've had bad unemployment, We've had a flat economy, so let's just start printing money, $40 billion into the economy, and let's see what happens.
So we're printing all this money, $40 billion a month, and it's going into the mortgage-backed, into the banks, to the mortgage-backed securities, and the government is going to be buying these loans. So that people know when the bank makes you a loan, they don't hold that loan and wait 30 years for your payments to come back in. They are selling it on the secondary market, Wall Street mortgage-backed securities. And the government is now going to be buying up those mortgage-backed securities. And who used to buy up those mortgage-backed securities?
Well, Fannie Mae and Freddie Mac.
Investors.
Yes. So.
And that's not happening anymore. The government is. So, you know, the plan is good.
It looks good on paper.
It looks good on paper.
As long as we don't run out of the ink in the printer, we should be okay.
Let's not ask, you know, that printer that just keeps spitting money out.
Yes.
You know, where's that coming from?
And hopefully this does not create inflation. That's one of the fears. It's one of those checks and balances. We print too much money, we could create inflation. But the good news for the real estate market is there's less inventory, we got low interest rates, and we have very, very low prices right now.
Right.
So what more could you want?
You know, exactly. Home prices being down so low, interest rates being at all-time low levels.
Right.
It is an absolutely ideal time to buy. So the whole point of all of this and stimulating the economy is to get people to buy. You guys all know it's a great time to buy right now. You know, rents right now have started to go up because so many people have had some credit issues and things like that, lost their homes. They can't buy a house right now. Our whole short sales and foreclosure series we just finished. They can't buy right now, so they're renting. So rents are going up. So you know, we did some numbers, working the figures backwards. Somebody who is renting right now, $1,200 a month, right?
Which is a fair rent. For
an average house.
Absolutely.
That $1,200 a month could actually buy them, rough numbers, about $170,000 house.
Ouch.
So if you're comfortable at $1,200 a month, you could be in a house for $170,000, and there's a lot of houses out there I think that you can get for $170,000.
In fact, I think there's a lot of ish pricing out there.
Right.
So there's a lot of short sales out there, but a lot of buying opportunity.
Right.
In fact, when we ran the numbers, I think we said on a $100,000 house with like 5% down.
Right. Minimum down payments are available.
And of course you got taxes and insurance to consider. And you do have, you know,
your PMI if you put a small down payment.
And it does cost, you know, you got upkeep on the home and you got to put more TVs in because you own the home now. Sorry, I had to go there.
You know, somebody out there, an average $100,000 home that somebody is buying, minimal down payment of 5%. We ran some really quick numbers with where the interest rates are right now, including their taxes, insurance, and their PMI. Their payment is like half of, it's like $688 or something. It's half,
and that's
almost half.
That's only based on 5% down.
Right.
$5,000. So for $5,000, they basically could shave almost half
of what they're paying in rent right now.
And they could own.
And they could own, and they get all of the tax advantages to home ownership as well. So that's you know, really huge. So if you know people out there who are renting right now, who are close to maybe getting back on their feet, because I know a lot of people.
Oh, absolutely. Not to mention the appreciation, the upside right now in this market. I mean, I feel like we've had so many down years. What goes down should come back up.
And we really have been on a really strong recovery lately.
Absolutely.
We've seen a lot turn. I know that you guys have all seen a lot turn out there. A lot more people are looking, which is awesome. A lot more people. Yes, the banks are lending. That's what I can say. And especially with this new $40 billion, they're going to be lending more. Billion, I keep on saying million.
It's $40
billion. The banks are going to be lending even more. Now, will they be loosening up on guidelines? Probably not, but that's okay because we're all kind of getting used to what they're looking for, and things are definitely going through. We're closing a lot of loans, and I know that a lot of transactions are happening.
Well, they're back to the old school of underwriting today. It's, you know, you got to document everything. You got to dot your I's, cross your T's, but loans are closing.
And as long as you have a loan person who knows what they're doing.
And they're at fabulous rates.
They go through great. So with the prices being down, the interest rates being down, banks lending, get with somebody who knows what they're doing, like us. and all of your transactions and your loans can close.
I'm going to be refereeing next week, so you better call DeLynn.
That's our show this week. I might need a new co-host if he's like...
If I'm not here next week, you guys will know where I'll be.
Check out your TV, I guess. We appreciate your watching. Again, this is our partners over here. Please feel free to click on all of their links as well. There's a lot of good people over there who can help you get your air conditioning done, your move done, your home inspections, your pest inspections, all kinds of things like that. They help us all the time, and I know they can help you as well.
And they're local.
And they're local. We are today and every day.
Moving forward.
See everybody next week. Bye-bye.